guys, the moment of truth. What do you believe in? Do you believe in the news or do you believe in the power of the charts? In this video, we're going to cover some charts that will answer the question why the market is actually about to drop. Now, to us, it's simple. Besides the charts, we combine charts with patterns and probabilities. And recently, we have actually came across a very rare sequence of 11262, which actually points to multiple moves, bearish move that is, in the market rather soon. We're talking about short term within the next 10 to 14 days. Now, the talk of the day, of course, well, Apple is hitting pretty much all-time highs or near the highs, literally $9 off the highs. And the story was so big last year when Apple was actually hitting the $1 trillion market cap. So this time it's coming around. It actually pays to remember what actually did happen to Apple when it hit that $1 trillion mark. So many people think that's actually a good thing. Well, let's take a look at this chart and see what's actually going on. So coincidentally or not, okay, last October, notice at the timing on this chart, my goodness, it was right here in September, October, when Apple was trading right around $230, topping about $234, and then the big drop all the way to $140. Now, of course, nobody wanted to touch Apple at the $140 when we recommended to actually buy the shares and buy a ton of calls on this thing. But nobody wanted to short the hell out of Apple when it was reaching this $220, $230 level, which we did point out the top at that moment, because coincidentally, Apple was not the only stock hitting the $1 trillion mark. There was another stock that was doing it at the same time. But just focus on this chart. So as it tries to touch this level of all-time highs exactly a year ago, almost down to a day, okay, you get this crazy $90 move, pretty much almost consecutive move lower. Look at all the red candles right here. And guess what? The headlines in the news, if you were just paying attention to the news, guys, they were identical to what they are today. Oh, Apple is about to hit trillion. Oh, it finally hit trillion. Like, look, it don't matter, okay? Sometimes the better trade is to really short the stocks at the top. So how do you know that this is actually the top this time? Now, we may be a few bucks off the top, okay? But if we take a look, not at just one chart, but if we take a look at multiple charts, there's just a heck of a lot of things out there that point out that the market is heading lower. So maybe Apple is not going to drop as much as some of the stocks, and we're certainly not recommending Apple is necessarily the best type of stock to short right now. But nonetheless, we can use the Apple observation to actually arrive at some conclusion what overall could happen to the market here very, very soon. Now, Apple is sort of an outlier, so let's take a closer look right here at the daily chart. Now, the daily chart is pointing to a double top, regardless of, overall bullish activity in Apple. If you actually zoom in and take a closer look what's really going on here, guys, you got this middle finger action going on. Basically, the stock shows off on super high volume. It didn't drop. Now, typically when you see a stock selling off on huge volume, but the magnitude of the drop is not big, it does not mean that a bigger drop is not coming. Actually, it is a preceding indication that a much bigger drop is cooking here. However, it does not mean that it's going to happen automatically and does not mean it's going to happen immediately. So keep that idea in mind as we're going through this for the rest of the charts in this video. But just keep this in mind. Overall, as Apple trades around these levels between 216 and 220, 224 area, there's a lot more selling going on. In other words, there's a lot more sellers that are willing to sell the stock here rather than acquire the stock, which is actually makes it for difficult condition for the stock to move higher. It does not necessarily mean that Apple cannot move higher. What it means that the predominant force in the market will take the stock lower. Now, observing some of the other things, MACD has just been kind of uncertain as Apple's been going around this area right around 220 level, but some of the other things are creating some interesting patterns here, very bearish patterns on accumulation distribution, such as head and shoulders, and that typically leads to a drop, not further rise in the stock. Now, today, September 30th, 2019 is Monday, guys, and this is what we're noticing. As Apple is actually hitting this double top formation on a daily chart. This is what's actually taking place. We're now seeing some serious activity where institutional investors are actually going and they're selling calls. Yes, they're not buying. I know it sounds stupid, but what they're actually doing is they are selling calls, which is actually a bearish bet. They're selling a whole lot of calls in the strikes of 230 and 235, which is basically a bet that Apple is not going to break above the 230, 235 level, which coincides with all-time highs or near all-time highs in Apple shares from last year ago, right about this time. So when you take a closer look, you actually will notice some interesting activity in buying puts. So they're selling calls, they're using that money to actually buy puts in this name right here. And, you know, as it's been trading between 220 and 224 pretty much throughout the day, overall moving higher, they were using this opportunity when the stock was moving higher. Institutional investors were using this opportunity to actually buy puts. They were buying puts in Apple and selling calls all day. Now, that is not typically the type of action you want to see if the stock is really meaningfully going to break above its all-time high. So to answer the question of the day, all the bullshit that they talk about in the news, okay, JP Morgan upraised the stock 265, it's a pop. Guys, this pop is going to be short-lived. It's about to turn around. So with that said, yes, Apple will go lower, but it is not the best play out there. You're probably curious, well, what is the best play, Leonardo? Why don't you just tell me exactly what the fuck I got to do tomorrow morning? Well, for that, we got a paid service, guys, and I like to throw a few fresh ideas out there, but the bottom line, a few fresh ideas out there, free ideas, is not going to make you a better trader. So if your goal is not just to get a few tips here and there, if your goal is to actually become a better trader, guys, it's just like with everything else in life. You gotta get your ass to work and study some damn charts on your own. But before you can do that, you gotta know what the hell is going on. You gotta know what to look at. So click the links below, get some courses, get some education so you can become a better trader. So here's the same thing that was happening last year. If you traded last year right around this time, September, October, you should remember that there was one other stock, one other favorite that was hitting the $1 trillion mark right about the same time as Apple did. And so now, unfortunately, that stock is nowhere close to all-time highs. So guess what that stock is? Well, clearly, yes, we are talking about Amazon, of course. And now this is quite an interesting situation. So Apple and Amazon were hitting about all-time highs roughly at about the same time last year, maybe within a month. Apart from each other. But now we're seeing the divergence between Apple and Amazon. And this is critical. This is actually very crucial to understand how market functions, right? Now we have a situation to where only select stocks are moving higher within the technology sector. And if you analyze pretty much all the technology stocks, okay, we're having a lot more stocks way off of their all-time highs compared to last year. So last year we actually had a situation where stocks could have actually broken out high. This summer, June, July, heading higher, we actually had a situation where a lot of cup with a handle patterns were created, and we actually had a very legitimate chance of the market breaking to all-time highs and moving higher. Now, all that situation is gone. Now we only have Apple moving high in the technology sector, while the rest of the stocks, they're way off their highs. All cloud stock favorites, they're off their highs. A lot of stocks are off their highs, which basically tells you that the whole sector is lagging. One thing that we know throughout the history, if the technology sector is behind, which has been the main driving force for about 10, 11 years now behind the market, that's what has been moving this market substantially high, along with the banking stocks when they bottomed in 2008. If you don't have technology stocks moving high overall as a sector, if you only got stocks like Apple that temporarily are popping, okay, well, the general trend has been short to bounce, short to pop. You know, when things move higher, just short the hell out of them and you'll make money. It's been that simple, okay? So when you look at a situation at this divergence between Apple and Amazon, okay, it tells us that the situation now is worse than the situation that we had a year ago, meaning you only got a few handful of stocks that are moving higher opposed to the entire sector. So if the technology sector as a whole cannot rally higher, that is definitely not a positive to the market. Without the technology sector, without the banking sector, we're going to take a closer look. at some point in this video, it's going to be very tough for the market to actually break out to all-time highs. So if you take a look at Amazon, okay, while Apple is trying to actually double top and hit these levels, Amazon, which has been institutional favorites of all time pretty much in the last 5 years, what it's doing is creating this head and shoulder pattern. There's a whole lot of things. One thing I do want you to focus, because you will see this time and time when I show you these charts in this video, guys, it's this. When the blue line gets close to the orange line, this is a def hook, which is a pre-existing condition to a def cross. After the def cross, typically things could drop anywhere from 10, 20, up to 30. Some instances up to 40, 50% in individual stocks. It does not mean that the entire market is going to drop 30, 40, 50%, but it does point to some very good stock picks, okay, which we often describe in our 13 Market Moves Daily Analysis video. If you're not subscribed for that, then just visit tradingoptionslive.com. Make sure you do. Or click some links below, get some more information about that. So some individual stock picks that we describe, we're not going to describe in this video, but this video is just about the main direction where the market is going. And it's important to understand that this divergence between Apple and Amazon in relation to how poorly Amazon stock is actually behaving in relation to, Apple stock. This divergence is phenomenal because for a long time, Apple and Amazon has been very highly correlated. So if Apple goes high, Amazon goes high. If Amazon goes lower, Apple goes lower. Well, now we have this big-ass divergence here, okay, where we got these two key stocks that are all-time, basically institutional investors' favorite, that are doing exactly the opposite thing. And this is something that you should not ignore. Now, in instances, the correlation is going to increase, in instances, it's going to decrease, but overall, in this type of circumstance, we've got two key technology stocks. It's supposed to be moving in the same direction, but they're not. And the chart in Amazon is deteriorating at the speed of light. Okay, literally, if you pull this thing daily, this blue line gets closer and closer to this orange line by day. And in such conditions, when you have some of the all-time favorite stocks moving higher, it's pretty much impossible for the rest of the market to move higher in regards to, if the strongest stocks can't move higher, shit, what do you expect from the shitty stocks? They're not going to move higher. Basically, Amazon, again, is getting closer and closer to this def cross. Def cross precedes some big-time drops. So could we see Amazon at 1,500? Absolutely. It's just around the corner. So if you keep looking at this, it just keeps deteriorating again and again and again. And notice the similarity, right? All these red candles right here. There's a lot more people, even at this level. We're way off the highs. We're way off this 2025 high. Now it's 1725. People are selling. Even at this level right here, guys, we have more people selling rather than buying. Now, take a look at this. Now, for the longest time, we've been an advocate for shorting Bitcoin. When it first hit 20,000 level, we said within 12 months it was going to hit 3,000. We nailed that move. Then we told people to buy Bitcoin. It was about 32, 3,500 in expectation to move higher. Now, the point of this is to actually illustrate that we have been quite accurate in utilizing the move in Bitcoin to predict what overall the stock market is actually going to do next. So if you focus on this chart, okay, Bitcoin hit a high in June of about 13,900. Since then, it's been creating what we call now 13 market moves for a minute, move 11. There's a whole lot of move 11s going on right here. So since then, dropped from 39 all the way to 8,290 bucks. And look, guys, there's nothing wrong with Bitcoin. Hey. However, there's time to buy and there's time to sell, just like with anything else. So if there's some Bitcoin haters, hey, go ahead, leave the ugly ass comments. I don't give a shit, okay? But the point here, if you Bitcoin lovers out there, would have listened to me a couple of years ago, then you would have sold Bitcoin at 20,000. You would have been able to buy it back at 3,000, or if you would really listen to what the hell I was saying, you would have been able to short it, make a shitload of money, and buy like 100 times more Bitcoin at 3,000 level. But so don't fight it. Basically, don't fight the charts is the main point. Bitcoin is going to drop back to about $4,000 or $5,000 level here in the next 60 days. Overall, the trend here is pointing to the fact that there's a whole lot of move 11s. Move 11s that point to a top type pattern. And so as this thing just moves lower, at the same time it creates certain key top information that we describe in detail in our 13 markets move formula. If you understand those, then you would understand how you would arrive at a lower level in Bitcoin. It does not mean Bitcoin, let's say, cannot jump 500 points tomorrow, but what we're seeing overall, the trend is lower. This thing is going to continue moving lower until it hits again this $4,000 or $5,000 level, and then it could just stall out there for some time before any significant move. But overall, the key idea here in regards to the stock market is to understand that this Bitcoin move from 13.9 to 82.90 is actually taking place as overall the stock market is not doing a whole lot. The stock market basically has been, and we're talking about the stock, we're just talking predominantly about S&P 500. We're going to reference the number between 2,900 and 3,000 levels. So understand this as Bitcoin pretty much lost again about 40% of its value. The stock market has not done anything. Okay, you know, it's been plus, minus, negative a little bit, going back to trying to revisit all-time highs again. So what I am trying to say is there is a bigger move lower that will take place. So I want you guys to be ready for it. And it's not just Bitcoin that's been a precedent indicator where the market is actually going to go next. Oil has also been a leading indicator of where the market is going next as well. So if we take a look, and it has not been such a correlation throughout the history of the market overall in the last 100 years, but specifically in the last 7 years, lower move in oil price, especially when the drops are sharp, where oil is losing, you know, 10-20% within like 10 days. That is a huge drop in the price of a commodity that the world relies on. And we have huge drops like that. There is trouble. Okay, things should not be moving like that. When you see something like this that we pointed out to our 13 Market Moves daily subscribers about 10 days ago, saying that, look, if oil doesn't break above the 61, 62 area, it's going to move substantially lower. Now, we said that in the video before this move lower actually took place. So today, oil actually had a level back to the 53 handle. Okay, so from 61 to 63, 53, guys, that is a huge drop. Not a huge drop if this drop was taking place over the course of a few months or, you know, 6 months or something like that. But it is huge when it's taking place over 10 days. That is huge. That is a huge drop. So considering this, it's important to understand that every meaningful drop in the stock market has been actually preceded by a fast drop in oil prices in the last 7 years. So the importance of the correlation is that recent correlations has produced some substantial drops in the stock markets, particularly last October, November, December, which we predicted accurately. And nobody was really talking a whole lot about oil, and we've pointed out that that was one of the key reasons why the market has actually been dropping. You know, of course, we pointed out the interest rates were going lower and so on, and we've pointed out a lot of things accurately. All the videos are on the YouTube, guys. You can go back a year ago and review them. But the most important thing that you should know right now is this move 11 keeps repeating itself on the oil chart, and substantially important is the increase in the volume as this daily drop continues in the price of oil pretty much daily after this pop, this bounce and drop, bounce and drop. So as a lot of people were getting excited that oil may rally back, it's actually just continues working its way lower. Now, what you're about to hear in the news the next 10, 15 days is the fact that oil is under 50 bucks. When that happens, oh boy, that's when you can get really some big drops in the market, like 600-700 points a day. That day is coming, literally, guys. We're not far from it. Okay, this chart is bearish as hell, especially if you take a look at the weekly chart. Jesus, you got the black candle action going on. Guys, look, I told you to pay attention to the situation where the blue line crosses the orange line. Look, you can pull up 100 different charts. You're going to see the same thing right here. But I'm just showing you the key charts. Like, we've taken a look at the S&P 500. We've taken a look at Amazon. We've taken a look at a lot of key charts that represent a lot of institutional activity when it comes to buying and selling things, and so they all portray the same message: is we are about to go lower. So in the price of oil, we're near a death cross. So once this blue line crosses the orange line, expect a substantial drop. We could see oil 45, 42, but actually, listen to Jim Cramer. I mean, he'll tell you this. Well, I like Jim. He's got some good ideas here and there, but overall, this is what Jim Cramer will tell you, that low oil prices are good for the economy, which in a sense, it's not a true statement, because if you really think about it, it depends on the reason why oil prices going lower. So there's two sides of the coin. There's more, but just to keep it simple for the purpose of this video, right? So oil prices are low is because of two reasons. Number one, the supply side there's just too much oil produced, and the prices are going lower. Or the two is the demand side. There's just a slower demand growth worldwide for oil, and therefore it represents a slower growth, slower economic growth. So if the oil is lower because of the first reason, the supply side, then yes, it's overall lower oil prices are good for the consumer. They got more money left in their accounts, so they can go spend on other stuff, which drives the economy higher. But if it's a demand side, then it's an issue, because especially for us here in the United States right now, considering USA is officially the top oil producer in the world. It's the question of the day: if the oil prices go to $25, how good is it actually going to be for the United States? And the answer is it's going to be hell, because think about all the jobs, like states like Texas. I mean, how many people in Texas are employed by the oil industry? Millions, okay? And so they're fixed to lose their job here in the next 12 months. Layoffs, as oil companies continue to announce bankruptcies. If oil goes down to $25, temporarily, there's not going to be that many bankruptcies, right? But if oil goes down to $25 and it actually stays there for like a few months, guys, there's going to be a phenomenal number of layoffs, okay? So the question is oil prices good for the economy? Well, considering the United States is the top oil producer in the world right now, if oil prices stay around $25 for at least a few months, okay, it's not good for the economy, definitely, because it's just like a domino effect, okay? So somebody in the oil industry losing their job, they're making good money, they used to making good money, now they can't pay their house. What happens to the mortgage company? They can't collect the debt. What happens to the house? It goes back on the market. Banks lose money. It's a domino effect. So just think about all these things and all the people that could be affected if oil prices indeed could go lower, which they definitely will. So, and when we're talking about this oil chart, it really represents the demand side of the economic development in the world. And so there's too many other charts worldwide pointing to markets moving lower. And I'll just give you a couple of brief examples. For example, Japan, right? There's nothing positive on this chart. And again, if you zoom in and you look at this crossover between the blue line and the orange line, this is what you get. You get similar conditions, just like on the chart of Amazon. That's right, just like on the chart of oil, just like on the chart of all the stuff that I've shown you so far in this video, guys. So the bottom line, it's identical. We got any chart you guys look at, you're going to get this type of similar condition in some charts to a greater extent than the others. In some charts, you have blue line already just recently crossed the orange line. So, but the overall idea is the same. In the situation of a death hook or a death cross, the next move is low. There's nothing bullish on this chart here at all, guys. If you take a look at the Nikkei Tokyo exchange, basically you got multiple black candles that signify a top. The next move is lower. You got a bearish crossover in the MACD here, right? I mean, there's just Hong Kong. Take a look at this. You got head and shoulder. You got similar conditions. Blue line getting terribly close to the orange line. There's no way to escape out of this death cross, guys. The markets are moving lower. It's that simple. Take a look at the Hong Kong daily. You got big ass 11th formation pyramid type structure, which is fall. I mean, look at with the timing of this. It's right after this death cross has actually taken place, when stuff after the death cross bounced. they have a high probability, like 80% of actually creating a further drop from there and visiting the lows of 25,000. So easily we could be going back here and breaking that level lower, also accompanied by a def cross on the MACD. Guys, this is not, there's nothing bullish on these things. And here goes an article about Mark Cuban today. I have close to $1 billion in Amazon stock. Well, Mark Cuban, nobody gives a shit. Okay, what you're not talking about is the fact that you bought the Amazon stock around 330 bucks and you've stuck with it for a while. So who cares if it drops to 1,500, right? I mean, it's not going to make any difference to him. But for us individual investors, that are trying to get our accounts, from 20K to 100, from 100K to a couple of million bucks. I mean, who cares what he's done? I mean, it all depends on timing when you trade options. So if you bought his shares for 300 bucks and they're now at 1,700 and he didn't sell them at the top of 2,000, it don't make no difference to him. I mean, he's still up 400-500%. Okay, but the question is, how does that impact your trading decision today? Just he's holding $1 billion of Amazon shares. There's institutional investors that hold billions of Amazon shares as well. Well, guess what they're fixing to do? They're fixing to dump all the shares. When he's not telling you, guess what? He's probably selling some, but it's not in the headlines. Okay, headlines are always delayed, guys. Okay, 3 months from now, you're gonna hear, oh, Mark Cuban actually sold half of his Amazon shares when it trades down to like freaking 1,100 bucks. Okay. Well, you're not going to hear about it now. But the 13 markets move formula is actually pointing to the fact that it is very likely to happen. So again, here's this def cross on Amazon, and it gets terribly and terribly close. Now, when you look at some other conditions, yes, the favorites are out of favor. And so you may say, well, where are the new favorites? Well, guys, there is no damn new favorites. And when you look at the less favored stocks, they're out of favor too. So when you combine all these factors, and there's not all of them, I'm just trying to show you just a few here, guys. Okay, market has no choice but to move lower. It is absolutely inevitable. The question is, it's just, whether it's going to begin to drop tonight after market closes, it's going to begin to drop on October 1st, October 3rd. Everybody's hopeful of this October 10th deadline for the, China-U.S. trade deal. But guys, look, let's not beat around the bush. There's not going to be no trade deal, okay? The way things are going, and with the way Trump is using his hostile approach, trying to just consistently threaten China, that stuff just does not work with China. If he would have used a different approach, it probably would have worked. But trust me, there's going to be no deal. There's going to be no deal on October 10th. And if we could have had a deal, there would have been a deal done already. So China is buying a ton of stuff from Brazil and Russia and other places. So technically, it doesn't have to buy, stuff from United States. It could buy it elsewhere. Now, the United States, cannot produce shit, so they have to buy stuff from China. And that is a problem because all Trump is doing is just taxing the United States consumer. So with that said, guys, Goldman Sachs chart is already in a def cross and double top formation, just like in the chart of Apple. Now, the chart of Apple doesn't look as bad as the chart of Goldman Sachs, but nonetheless, what a coincidence. Right about the same time frames, we're getting this double top formation in the chart of Goldman Sachs. So looking very bearish right here, guys. And you may be wondering, Leonardo, you sure talked a lot in this video. Why can't you just tell me where the hell is the market going? So here you are, 2750. There's your lucky number of the day. Basically, we're saying the market will go to 2,750 bucks in the next 14 days. And I'm recording this video on September the 30th. So between October 1st and October 14th, the market will trade down to 2,750 bucks. There you go, damn it. I give you another freebie right here. But guys, it's not about getting freebies, okay? It's about learning how to trade, learning some individual trades that could, rocket your account to the moon. And Thank God we got the opportunity to do just that. So with that said, there's one thing I want you to pay very close attention to, and that is level 2946 in the S&P 500. Once we break that level, guys, this is time to strike, because once we break that level on heavy volume, we're definitely going all the way down to 2750 right here, guys. Okay, with that said, I wish everyone happy trading. If you haven't taken our courses, guys, we just created a fresh course, only priced at 597 bucks. Okay, you can get 6 hours of valuable information. It's called 233 Secrets of Trading. 233 Secrets of Trading, guys. We answer questions live from traders that are either starting out or seasonal traders or high roller traders, and we're giving specific answers on how to address certain situations with trading. And guys, I don't know of any other course that does it in such an interactive style. So if you're really trying to learn and you're trying to advance your trading skills to the next level, this is definitely the one. Take the next step. Quit fucking around. Do it now. Let's roll. Make the next 2 weeks your best trading weeks ever. Let's do this.
Trading wins and losses is just like everything else in life that is worth fighting for. You remember your marriage? Man, it was beautiful when you were getting married, but you had no idea how ugly the losses of this divorce were actually going to be. Like opening a business, thinking you'd get rich overnight. But in the midst of it, you ended up maxing all of your credit cards just to sustain that business for a few years before you even realize a tiny bit of your first profits. Like buying a house, thinking it would go up in value forever and ever, just realizing how wrong you actually were when 2008 hit. Like having kids, it was such a great idea at first. Remember how excited you were, terrified and scared at the same time, how much joy you actually had. Until your kids turned 2. Man, the terrible 2s. You thought that was bad until they turned 13, 14, 15. Shit. But you wouldn't change it for anything. You love your kids, no matter what your emotional losses or wins are with them, no matter what your financial losses or wins are. It really doesn't matter, does it? You don't quit on your kids, no matter how tough things actually get. For some of us, it's the same thing with trading. Just think, how long are your kids going to be your kids? The answer is forever. How long do you see yourself trading the markets? If your answer is forever, then you owe it to yourself and your kids to invest in the 13 market moves formula, so that your life journey of trading would be most rewarding and joyful, both financially and emotionally. Live to trade, trade to live. Conquer the world one trade at a time, fearlessly using the 13 market moves formula today.